guys, SP Forex right here. Super excited to bring you brand new videos on how I basically look out for what I basically look out for in the market before I take a trade. So now, number one thing I look out for in the market is just a simple structure, which is the highs and lows in the market. If we are on a bullish move, look for highs. I will look for lows. That's market breaking structure to the upside. Then there is a strategic way I use my own. So now, when we are seeing bullish move like this now, at first market has this low high here and this low. Then when market break past it, I stop focusing on that low. I look out for the next low and next high. Then after market break past it, I stop focusing on that one now. So this is how I use my own now. You see, as market has break past this low, this high, then it has this low. So these are the structures, these are the points I'll be focusing on in the market. So I have this low now. Then if market starts reversing from here, right, then I have this high to pick trade from. Then now, after I've gotten the first concept, the first part of the trade, is I go down to the lower time frame, or you mark the higher time frame POIs you can see, which most of the time and nowadays I use more of the demand level, which is the order block. So I have this demand level here. I'll wait for this demand level. Then when I go on the lower time frame, this is how markets will approach the lower time frame. Market will approach the lower time frame. On the lower time frame, which is my entering time frame, it will be like this. Share grab. Then when market taps this zone, there are two ways I use in entering this point now. Wait for a market structure shift and inducement. Then we cannot enter from here, or most time we can enter from here, or sometimes market will come and sweep this low again, then continue to the upside. This is basically how I trade. Then now let's go to the chart. I'm sure you've seen the structure I've given to you guys. First thing, identify our range, which is the structural range. We'll put it as the structural range. Then the second thing, identify the demand level or the supply level. Third thing, wait for our market structure inducement, then point of interest on the lower time frame. Let's use this BTC for an example. This particular BTC trade 1 to 5.6 RR. The first thing I did was 4 hours POI. Then look at this. Market was breaking structures to the upside. At first it was this structure and this structure, so we have this low, and we have this high. Then now we'll now mark a supply level from there now, which is a selling point. This is the supply level we've marked from that level. Now then, if I'm using 4 hours time frame, confluencing it with my time frame alignment, I'll go to 30 minutes for entering. So now if you go to 30 minutes for my entry now, if you take an aggressive entry, you enter from here. Because everything is complete. Break or structure, market structure shift, inducements, your entering point. So now your target is going to be this low. Then your SL is going to be above here. That's a 1 to 3 RR. But if you confluence it using this thing, as they call it, if you look for re-entering, you'll be getting a tighter one. So this is how I've gotten the first one. Then go back to the higher time frame again. So market has broke past this level, right? Market broke past this level, so we have the next one, this high. Let me delete this one. We have stop now. So we have this high now and this low, which market broke past it immediately. So I didn't give a damn about it because I was unable to trade. Market was consolidating at that point now. Then the next one we are now having is this high and this low. So where is our demand supply level? We have this one to be our supply level, right? Scale down to the lower time frame, which is the 30 minutes time frame. Then on the 30 minutes time frame, we got the sweep, we got the shift, we got the inducement, then this is the POI. Immediately market gets to that level, we place our order, then write it down to this level. Hope you guys see what I'm saying now. Number one thing is the structure. Let me mark this out. One is the structure. Structure. That, not seeing this thing. Can't see this thing clearly. Number one, you pick get the higher time frame structure. This is the direction at which you will be trading in line with. Then the next thing to do is to come to your lower time frame and look for confirmation. So this one, this particular one, if you, how you would have used confirmation in trading this one is, since we could not get it at that point immediately. I have more examples. Now, aggressive will have been much better. So let's move to XAUSD. Go back to the use the same approach I gave to you. Any time frame that you are cool with is fine. So now same thing. We identify that the market is on a downtrend, right? Mark the previous low after the previous high that caused the break of structure. So I mark the high, then where's the break of structure? This is the break of structure. Then I mark the low at which it has given to me. Then what do? I identify my supply level. So this is the supply level on the higher time frame. Then I scale down to the 30 minutes time frame for my entry. Then when I get to my 30 minutes time frame, wait for a market structure shift. Market structure shift. Then where is the inducement? This is the inducement. Then where is the nearest POI, which is this order block now. Then I put my entry in that order block, my stop loss a little bit above the order block. Then target will be at this level. So with this trade, we are currently running profit of about 1 to this is 1 to 8 RR. The profit is about 1 to 3 currently. So now that's how basically you can trade and keep it simple using structure liquidity point of interest. Peace out, guys.